Welcome to the third QuickBooks training video. In the first video, we reviewed the process of configuring your company setup with your QuickBooks web connector and connecting AutoPal with your QuickBooks account. In the second video, we worked on the company level configurations of sending over vendors, closing dates for accounting periods, and your chart of accounts and items and services. In this third video, we will actually set up an individual loan account and send that account over to QuickBooks. If we navigate back to AutoPal, I will choose a loan account from my loan manager, and we'll go simply to create that loan from scratch. I'm in the AutoPal Automotive Demo account, and for this example, we'll just simply go ahead and create a new loan here. Select Auto, and I have a VIN number entered already. And we're going to select our source company of Big Al's so we know who to write the check to, and go ahead and hit next step. We will go ahead and create a new user, and this will be a sample QuickBooks customer. And we'll give them a social security number and a birthday and a gender. And we do have that customer set up now. Go ahead and create that customer, and then we're ready to create our loan account. From all the other training videos, I'm sure you're familiar with the process of creating a loan, but in the QuickBooks training, this is slightly different. After we create this loan setup, we simply will click on the QuickBooks tab. I wanted to create a loan just from scratch, just as an example for you, and show you some different configurations. Go ahead and enter a loan account. And obviously you have different default settings and things on an account. I want to show you how and what AutoPal does with your QuickBooks. So based off of a few settings in your advanced configuration, different settings will be set up in your QuickBooks. Primarily the accounting discount split, yes or no. In this account, I have set up a $1,000 discount, meaning that the face value of the loan is $5,000. However, you acquired it for $4,000, 5 minus 1. And that additional $1,000, because on your balance sheet you have a face value that the borrower owes you of $5,000, do you want to have $1,000 of income in the period in which you fund the loan? And that would be the accounting discount split of no, and that would move $1,000 on your QuickBooks of discount income. Or if you selected accounting discount split of yes, it would actually set up inside of your QuickBooks for your chart of accounts. It will move from a discount income to a deferred discount account for an other current liability. It would set up $1,000 in there, and as they make payments over time, it will pull a little chunk out of each payment. We will set that example up for our demo, as it's a little more comprehensive and will cover a bit more what folks are hoping for. So now that we've set up this account, I'll go ahead and select Calculate Save. And from this process, I have my new loan set up. We'll go ahead and select to activate our loan account and drop that loan account in. And my loan is set up. I have a loan account, I have a vendor, and I have a collateral and a customer and so forth. So once your loan account's set up, you can do all the other various tabs inside of a loan. For the QuickBooks training video, we'll simply click on the QuickBooks tab, and all you need to do is send that a customer over to QuickBooks is simply select Sync with QuickBooks. If we sync that account over with QuickBooks, if I pull up my QuickBooks account here and go to my customers, we see we're blank. If I pull up my web connector and go ahead to do Update Selected, we will see that it creates a new customer, and it does a variety of transactions. I get a general journal, I get an invoice, and the tracking of the account. If I go back to AutoPal and refresh this page, it will show my customer is synced. As well, the AutoPal balance is matching the QuickBooks balance. And the items over here on the left-hand side will show you each individual transaction that occurs with a button. We had a funding check and an underwriting fee. If we choose to expand, we'll see we have a funding check of $5,000 and an underwriting fee of $99. That is correlated here inside of QuickBooks with a general journal setup of $5,000 and an invoice of $99. If we pull up that invoice, we'll see it's an underwriting fee. So if you had adjusted what service account that was linked to on your P&L, then this would be associated, and you can track that out. In addition, the general journal is set up. Inside of my general journal setup, I have an auto notes receivable that is increased by $5,000. We pulled $4,000 out of this clearing bank account, and we set up a deferred discount, which is an other liability account, of $1,000. If I pull my company balance sheet at this point, a brand new loan has been set up. And so if we look at a balance sheet here, and I'm looking at accrual accounting, and go through the process, I have negative $4,000 in my clearing bank account. I have auto notes receivable because it's my only AR account of $5,099. If I split out a different accounts receivable account, I would have a $5,000 auto notes receivable and a $99 AR on the account. And it shows total current assets, and it shows a liability of $1,000, an income of $99, and so forth, because we're doing accrual accounting for the underwriting fee. Notice this deferred discount is $1,000. As well, we have a negative $4,000 on our bank account. Now, of course, that's because we have $5,000 in auto notes receivable, and we realized income of $99 on this account. In addition, in our setup, had we selected to the option here inside of AutoPal on the initial setup tab, had we selected that option of doing a discount split no right here, then on the configuration inside of QuickBooks would have changed this deferred discount from another current liability rather to a discount income, and that would have been realized as income in the period. So if we change that here just for an example, and then if we pull a profit and loss, we're going to see we have $1,000.99 in the period that we funded the loan, because we realized that discount is income, and still the customer still has a balance of $5,099 and so forth. So it's just primarily the difference of toggling the discount income versus the deferred discount. A majority of the clients will do a deferred discount, and you can check with your CPA and tax professionals exactly as to all of the benefits of that. The next process, now that our loan is set up, is to understand the processing and how everything occurs throughout the loan. Today's date is 8/30. I have my first payment coming up on 9/1, and this loan is set up as a between transactions loan, and so we'll go ahead and make a payment on this account. When I make a payment, we'll go ahead and select log payment, and I'm just going to do a cash payment, and let's say we do a $300 payment on this account and post that. When we post that payment, because the between transactions calculation, it will create an invoice. So if we go to our QuickBooks, we're going to have a discount created of $51.90. We're going to have an interest invoice of $40.51, and we're going to have a payment of $300 post over. None of these buttons currently have a delete icon next to them, as well as I am showing in red that there is a difference. If we run our QuickBooks web connector on that account, and it looks like it has ran just in the background while we were discussing that, it's created a payment for $300, a general journal moving $51.90 from deferred discount to discount income, as well an invoice for the interest that accrued between loan origination and the pay date, because it's a between transactions, and the next time it'll go between this date and the next date they make the payment, and so forth. If we go back to AutoPal, refresh the QuickBooks tab, we will see in green we're matching the balances, as well as we have a nice grid here showing discount, delete, payment, paid interest, delete interest. If it has a delete associated, that means it's sitting inside of your QuickBooks, as well as the matching balances. In addition, we also provide underneath the Payments tab the expansion of the stats of a payment to show a green check mark and the QuickBooks TNX ID number if that item is inside of QuickBooks, and you can see the posting of the transactions, who did it, and so forth. You kind of play out with the different controls of an account. The fun part is you can do this in bulk. And so we will finish reviewing a few items inside of an individual loan, such as charges and so forth, and then we'll go ahead and show you how to do this in bulk. Had we gone into this account and done the application of a charge, and let's look at your QuickBooks here, so we're applying a payment here, we can see if I do a charge large enough to affect the interest, because my waterfall application is going towards fees, then interest, and discount principal. So if I made a charge of, say, $280, well then the $300 would only apply to the charge and have $20 left over. Let's show you how smart the system is to update that. If I go in and create a log charge, and let's just do a late fee of $280 on an account and save that charge on an account, it will send over some configuration to QuickBooks. Notice if I click on the QuickBooks tab now, it is reconfigured. It paid $280 towards a fee, and it paid interest of $20. My number's going to be way off here until I run my web connector. And in the background of the web connector, we will see a bunch of things happen. We will see the removal of some transactions and the updating of other transactions. And so now you see there's an invoice of $20 for the interest. There's also an invoice for $280, and it removed that discount because it no longer has any application to it. So if we update these here now, we'll still see that I'm matching on my balances and all the variables are matching. As well, if we go back into the charge and say we change that charge from $280, we change it to $30. This will give a different application of how that payment applies. And so we go ahead and do that charge change. Go ahead and pull up our background here. We will see a bunch of updates on the transactions and the variables updating and the values. If we go back to AutoPal, go to the QuickBooks tab, we will see we're now updated. So it's a pretty smart system to go in. It'll update, try to keep everything synced in on the accounts as you make adjustments and transactions on account. That is the primary reason of having the QuickBooks cutoff date, is so that you can't just go back and change the numbers way back when, and it'll update everything thereafter, because these applications of payments are based off a waterfall application. Gives you a lot of different tools this way. Now, a between periods loan is slightly different because the interest is charged on the due date. It's still accrued daily, it's just charged on the due date, which is different than a between transactions having the interest be charged on the pay date. And so if this was a between periods loan, and we provide this example in the first video, you'll see that the charge date would be on the white line of 9/1, and the interest would be associated. There wouldn't be a delete interest part of the blue line. It would actually be part of the white line on an account. Typically, the most common questions are what we've already answered of why is the funding check not sending over, and the tracking of different payment types. So if you went in and made a payment type here and they selected something like a payment method here of Pay Near Me, but inside of QuickBooks they don't have a payment method of Pay Near Me, so it's trying to post over, they don't have a method here. Typically you'll just come in, select add new item, have that exact match of the name Pay Near Me in this example, and then you can choose your payment type application, how you want that to associate, typically other, something like this. And then now you'll have a Pay Near Me here, so if we send over, it'll associate. We provide you some tools, some debugging tools to see any issues that are coming over, and primarily the matching. If you see in green or red, if the balances are matching, it'll give you a heads up if something is right or wrong. To do that in bulk, you can do it outside of an individual loan as well. And so you can go to your loan manager for your company list here, and you can go ahead and choose whatever your search results are, do advanced search, narrow down, maybe how about we search just for Big Al's Automotive, see how many accounts this demo account has. It has 92 accounts, and then we can choose what would we like to do with those accounts. From our data options, we can send those to QuickBooks tool. This will load over all those accounts to my QuickBooks tool, and we can see here on the account that almost all of these are not synced because it's the demo account. And I'm going to go ahead and pull up the accounts and kind of track out some options. If we say give me all the accounts that are synced, I have one, the demo account we just barely did, and we can see is the loan modified, what's the AutoPal balance, what's the QuickBooks balance, and the difference. As well, you can search based off of there's a QuickBooks balance matching or not matching, if it's synced or not synced, and choose to do actions in bulk. You would select the boxes you want here, or use these tools here to select which box you want, or all the boxes, and then you choose which tool or action you would like to do in bulk. If you want to do the sync with QuickBooks, the account setup, send all transactions, send the customer, reset the loan, or update the QuickBooks balance. All of those exact tools are outlined and explained inside of an individual loan. If we navigate back to open up an individual loan, all of those are the same tools that are available here, but you can now just do them in bulk. If we do them on this side, allows you to send over 100 accounts at a time, or send over 10,000 accounts and so forth. Gives you tracking, as well as you could do individual buttons here to send over, and keeps track of a few of those options. So if we want to, for example, search for an account that is not synced, and let's go ahead and select a handful of accounts here, just for purposes of the training here, we'll go ahead and select those accounts, and we'll say sync with QuickBooks. It'll load up these accounts, and we select Run Selected and accept that. This will queue this up and send those over. We will see in our QWC queue management a few items are being entered here. These are pending items to go to QuickBooks, all the transactions and things that have occurred on those accounts. If we go back to AutoPal here and run our web connector, back to QuickBooks and run our web connector, we'll see it'll create some customers that we asked it to do, as well as it'll post over transactions and things on those given customer accounts to have their balances match. And so there are a bunch of communications that will occur. I think we selected like 5 accounts to come over or so, and we'll see those customers come over, payments get posted on them. We can see, for example, some payments and invoices and so forth, and they get posted throughout that account, and we'll get a tracking of those accounts. So you can see the numbers updating live in the background as the web connector is running the commands that we sent over to the web connector. So it gives you some pretty powerful tools to kind of track out some balances, and now that we've ran that, our QuickBooks queue is now blank. So that's the general review of the QuickBooks training. If you have any questions outside of the system, we recommend to discuss those with your CPA. Our most frequent questions that are not a software concern is about company configuration, people having questions specifically related to their chart of accounts. We will review how the bank works here. This bank works that it's a clearing account. So all checks will be funded from the bank. We review this in the first video as well, and then you simply would offset those. So if you have an actual Wells Fargo bank or US Bank or whoever it is that you're using for your actual bank accounts, you'll be able to fund in rounds, and you offset that. So this bank account should be used as a true clearing account, and it should, if you're fully funded, it should have a balance of 0. And so if we pull up like a profit and loss, or rather a balance sheet for this given account now, we'll see that we have a big negative balance in our bank account. We have auto notes receivable, undeposited funds that payments have come in, deferred discount, and so forth that we can see it's tracking out. Gives you some abilities to track out that bank, auto notes receivable, and deferred discount. That deferred discount is a second common question people have. Our deferred discount account here, simply we can see we set up $1,000, and these loans were set up, but they didn't have a balance of deferred discount, so they just have 0. And then we had a payment that applied that reduced our deferred discount, and this is money coming through of deferred discount income and moving from the deferred discount account to the income account as it realized that payment over time. So that's a review of the QuickBooks process. If you have any questions, feel free to schedule a QuickBooks training or discuss those with your CPA. Go through that process. And if you have any questions or comments, please leave them in the comments area of this video.